Hey guys, Raja Mizan here. In this video, I'll talk about bounce back loans. Many of my clients who took bounce back loan when it was initially offered, it's almost time for them to pay the first installment of their bounce back. However, they do have some options to consider. First of all, if your repayment is due, your bank is going to contact you at least 3 months before with the information and how much they need to pay and when the first payment will be taken. It will also offer you an opportunity, now this is very important, to delay your first payment for 6 months. So your first year was free and now you're given another 6 months free without having to pay for this loan. However, you will get this option only once over the life of the loan. If you struggle to pay back in future, or your business has gone so bad that it is just not possible to continue paying the loan back, then you'll have to close your business, and you cannot just close the business. You'll have to follow the proper procedures, which I will talk about at the end of this video. You will also be able to extend the life of your loan from 6 years to 10 years if you haven't done already. Before the first payment, the bank will ask you if you would want to do that, and you have a right to do that. The bank cannot refuse that. If you have taken a loan of 50k, that's over the 10 years, that could be a lot of money to be paid back every month, which will include the principal amount and the interest of 2.5% there. So there's another option available. You can pay only the interest payment for 6 months, and you can avail this option 3 times over the life of the loan. So not just one, 3 times. So these are the options you have before you start paying your bounce back loan. One thing which some of my clients have asked me, that they took the loan, they paid the rent, they paid their staff, because for some reason they couldn't go on furlough, so they had to keep paying their staff as well as per the contract and so on, and they ran out of money. Now 50,000, if you're running a small business, if you have to pay rent and 2-3 employees, then 50,000 would perish in 6 months. So that is understandable. If the business is too bad and there's no hope to continue, then in that case you'll have to close your business. And if you are a limited company, then you are in safe hands. Not entirely if you do not follow the procedures. However, if you are not a limited company, then that is a big problem, because you will have to pay that money from your personal money. It is the responsibility of the directors that they inform the authorities, and that is Companies House, that they are unable to continue as a business because they are insolvent now. So insolvency means you are unable to pay the money to the lenders. As soon as a director of the company is aware that they cannot continue doing business, they should go through the insolvency procedures. Now this is different than just simply closing a company, and some of the people I know, they actually tried doing that they closed the company. So when they close the companies have informed the banks that the company is closing, and then the bank started chasing them. So you can't do this. The right procedure is to go through voluntary insolvency. If everything was genuine, if you're paying the rent and if you're paying the employees, then you have nothing to worry about. It will be justified, and there's no personal liability. However, if you delay, you do not tell, there is a chance that there could be a personal responsibility. So as soon as you're aware that you cannot carry on, you cannot pay back the loan, you should start the insolvency procedures. And for that, you can contact us, and we would be happy to guide you. You can contact us at rmr-accountants.co.uk or on our number given on the screen. If you don't go to the voluntary insolvency, eventually your lender, which is the bank, is going to chase you for the installment. And if you have availed all of your options, not paying for the first 6 months at all, and then the next 6 months only paying the interest, eventually they will start chasing you and you will be in trouble. In that case, you will have to go through a compulsory creditors insolvency. So then the creditors will assign an insolvency practitioner, and the company will be out of your hand. You will no longer be allowed to carry on with business, the bank account authority will be taken away from you as well. So these are the things I believe all of the people who have taken the bounce back loan should know. And if you need further guidance, please contact us at info@rmr-accountants.co.uk, and I will be happy to help you on the matter. Thank you for watching this video. If you liked it, please share with your friends or people you know who may need this information. Cheers.